Today, we're answering the most misunderstood question about Warren Buffett and Berkshire Hathaway's stock portfolio, and that is why are they sitting on $100 billion in cash? So let's jump right into this. Welcome back, my passive income investors. Alike today, I found a golden nugget of truth coming from the Oracle of Omaha's mouth himself, the great Warren Buffett. Recently, and actually in the past, there's been a ton of confusion about why Berkshire Hathaway's company, or Warren Buffett's company, is sitting on $100+ billion in cash. And I want to go over this, and then we're going to actually show you the clip of him explaining why you don't necessarily need to be sitting on any cash, which is very confusing because if you look at a lot of people that talk about a bear market, a recession, they take this advice from the past that Warren Buffett always said, which is you want cash on the side. You want a tub, a golden massive tub of money, so when the sky is falling with rain, of golden rain, you can pick it up with the biggest tub possible. He's just referring to the more cash you have on the side, the better opportunities you have in a recession to pick up things on pennies on the dollar. So a lot of people have based this $100 billion around fear. Now, Warren Buffett does hold this because of fear, but it's not because of the fear of a market crash. And I think this is going to be best said out of his mouth. I just want to clear the air up on why a lot of people seem to think that Warren Buffett holds $100 billion in cash because of a market recession. That is not the case. So roll it.
You have over $100 billion of cash.
Berkshire does that.
Berkshire. No, you maybe you do. Berkshire has over $100 billion in cash, and you say that you always want this company to be a fortress. So how much cash should an ordinary investor have on a percentage basis, do you think?
It depends on their personal situation. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent diversified businesses, you don't really need any cash.
So you can be more cash-free than Berkshire is.
Yeah, I've got responsibility. We've got insurance claims. We could have hurricanes that, would happen. All kinds of things where we might have to pay out billions of dollars. And I've got over 1 million people that own shares that are counting on me to run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children had grown, the house was paid off and everything. But, I wouldn't worry too much about having a lot of cash around.
Let's talk.
See, I love this advice from Warren Buffett because for the years I've been listening to him, a lot of people have taken that advice of waiting for a recession, waiting for a crash. But if you've been sitting on the sidelines for the last 5 years, you have missed out on a massive amount of capital gains. And I honestly think as a personal passive income dividend investor, what we try and look for into the future is good, solid, sustainable companies that can even survive recessions, because I honestly think you're better off having all of this money invested into a nice cash flowing, stable, reliable company. And if that's cash flowing, even in a recession, you're still going to get cash flow that you can use to invest into other companies. You are better off having income coming in than having cash rotting on the side, because over the last 5 years, the capital loss that he would have had on that $100 billion would have been staggering. But at the same time, well, opportunity loss as it is called. But at the same time, as he mentioned, when you're managing multi-billion-dollar companies like insurance companies and some big natural disaster strikes and takes out your home, he might need that cash to pay off that debt that's going to come from whatever insurance crisis may happen. And this is how insurance companies work. So you're going to notice most insurance companies need a certain amount of balance in their bank to insure against any crises that come if they need to pay out huge dollars, as he mentioned. So I think this is a fascinating video. Let me know what you guys think in the comments section below. Really interesting topic. I can't wait to get into 1,000 subs. Thanks so much to the 900 subscribers sticking around here, guys. I can't wait for 1,000. We're going to start live streaming. We're working on some collabs this month, which I'm super looking forward to. And I need to update you guys on so much, but I've been crazy busy. So bear with me as I continue to keep hustling. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.